Infinite banking, is it safe? How secure is infinite banking? In these times of questionable schemes and sophisticated scams, it's very important to understand what you're getting into and to do your research before committing your hard-earned money. Especially in recent history, we've seen many retirement accounts suffer heavy losses due to downturns in the markets. It is wise to be cautious. On that point, qualified retirement accounts such as 401ks, IRAs, and the like were created in the 1970s and 80s. At that time, the federal income tax rate was as high as 75% of the gross income of the highest earners. So back then, it was a good idea to defer income tax to a later date when the tax rate might be lower. In fact, now the federal income tax rates are the lowest they've been since the 1960s. So the question now becomes, is it still a good idea to defer income tax to retirement? With the national debt at stratospheric highs and the tax rate at historic lows, it would seem that strategy would now be a very bad idea. Think about it. If the tax rate is at a low point and the national debt is at an unrecoverably high point, what direction is income tax most likely to go? We know it's going up. And that means that if we're deferring income tax now to when we retire in the future, we're going to be paying a higher tax rate in retirement when we take that deferred income. I'll come back to the point of this video in just a moment, but let's take a quick look at the safety and security that qualified plans offer. To answer that, we have to look at what those plans are invested in. By far, the majority of 401ks, TSPs, IRAs, etc., are invested in the stock market, mutual funds, and individual stocks. Now, all of those investments are subject to the volatility of the markets and are therefore at risk of loss. So, how safe and secure are they? They are neither safe or secure. Now then, how safe and secure are infinite banking accounts? The infinite banking strategy in the tax-free cash growth warehouse, which is based on infinite banking, uses the cash value of whole life insurance. Because of that, the accounts that infinite banking and the tax-free cash growth warehouse strategy uses are as safe and secure as the providers of the whole life insurance policies are. To be sure, not all whole life insurance providers are equal, but the top providers, or what we in the industry refer to as the Big Four, really are the standard for what financial safety and security is. In general, all life insurance providers have to show that they have liquid reserves equal to 2.2 times the amount they have promised in death benefits. That essentially means that if every policy a provider has issued made a claim for their death benefit today, they could pay them all out and still be in business tomorrow. That's pretty darn safe and secure. But let's look at the two providers we at SCFSIC use for our clients' infinite banking tax-free cash growth warehouse accounts. I'm not going to name them here for compliance reasons, but both providers we use are among the Big Four mutual companies. They have been in business for 170 years or more, and they've paid dividends to their policyholders' accounts for more than 165 years in a row. That means they've paid dividends even in the years of the Civil War, World Wars I and II. They paid dividends during the Great Depression and all the recessions the country has experienced. Now that's a demonstration of financial safety and security. So the accounts that Infinite Banking and the Tax-Free Cash Growth Warehouse use are the safest and most secure in the entire financial world. But what about the actual Infinite Banking Tax-Free Cash Growth Warehouse strategy? Is that safe and secure? Well, as long as you follow the rules of sound business practices when practicing the strategy, it is as safe and secure as the institutions that provide the accounts. That means that you can count on earning the highest guaranteed interest rate available. You can count on all that guaranteed compounding dividend interest to be exempt from income tax, as long as the money remains in the account. And that's one of the main reasons why we leverage the cash value instead of withdrawing it when we use the strategy. The other main reason is because as long as we keep the money in the account, it continues to earn the high compounding dividend interest, even when all the money is fully leveraged. It's because of the tax-free growth and use of funds that Infinite Banking Tax-Free Cash Growth Warehouse strategy creates that reduces tax liability. With any other account that earns interest or dividends, you have to pay income or capital gains tax on the growth of the account. While qualified accounts let your money grow tax deferred, you are required to take distributions at age 70 and a half, and you will be taxed on those distributions at whatever the income tax will be when you take them. However, with the Infinite Banking Tax-Free Cash Growth Warehouse strategy, you can leverage your cash value for retirement income without paying any tax on it at all. In fact, you can actually withdraw from the cash value all that you paid into it without paying tax on it as well, because you already paid tax on that money before you paid it into the account. Now, by comparison, and this is interesting, Ted Benna, the guy who created the 401k back in the late 70s, early 80s, has said in recent years that the whole 401k program has become an out of control monster that should be blown up. In fact, Ted has moved his money into infinite banking style accounts. Think about it. Why would you want to defer paying a lower tax rate only to pay a higher tax rate on the money in retirement? And take the risk that all that money you paid into and grew for retirement could be completely wiped out, lost in a single downturn of the market. On the other hand, the cash value you grow in your infinite banking tax-free cash growth warehouse account is not in any way tied to the stock market, and therefore is not subject to the risk and loss inherent with the markets. And here's an eye-opener for you. Currently, the provider we use the most for our clients' accounts is paying 6% compounding dividend interest. And that's the lowest it's been in years. So to wrap this up, I want to make it clear that infinite banking in the tax-free cash growth warehouse is not a get-rich scheme. It's not any kind of scheme, and it certainly is not a scam. Now, just because the strategy and accounts are truly safe and secure, and the strategy itself is the most powerful finance strategy in history, doesn't mean that it can't be abused. Look at, for example, the stories about people who have won millions in the lottery or who have made millions playing pro sports, and then just a few years later ran themselves into bankruptcy. If a person is foolish and has no self-control, this is not the strategy for them. But it is, in fact, the safest and most secure plan for your money. The strategy actually does multiply the value and power of your money. So if you can play by the rules of reasonableness and good business practices, infinite banking and the tax-free cash growth warehouse strategy will prove to be a phenomenal advantage for you. If you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below here. And the link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is also below. You know, we're here to help, and we look forward to helping you. So for now, aloha and mahalo for watching.